How's it going, everyone? Welcome to the weekly trading review for the week of October 22nd. As always, I'm going to start with how I did this week. We'll get into what the market did, and I'll break down each of my trades via swing, day, and other. So this week I had 13 wins, 9 losses, net loss of $1,095.02. Swing trades, 5 wins and 4 losses, net profits of negative $937. Day trades, 5 wins and 1 loss, net profits of negative $1414. And my other, or the SPY Super System trade, which I have been learning on the side, net loss of negative $231, 2 wins and 3 losses. So let's get into what the market did last week. And you can see that on the D1 chart, market has been in a pretty choppy move here since this bearish candle on the 10th, reaction to tariff news regarding China and rare earth minerals. A lot of chopping, high volatile price action the week before. This week we got a gap up and the price action kind of died down. We got one little bearish trend day that ended with a big little tail. And then on the 24th, we finally got some of the CPI numbers released, and the CPI was looking just fine. So the market had rallied up on that news, and it had held the gains on that breakout. So we had made a new all-time high on that news. So on the 24th, this is pretty bullish because we're actually able to get above this high. We're able to eat through this red candle, and we were able to see that through this time, we're able to get higher lows and churn up and kind of digest some of the selling pressure. It was a choppy, tough move higher, but we managed to get above higher. If we'd stalled here and cracked down, that would have been a lot more bearish. But the fact that we're able to get a new all-time high means that this bullish trend is still sustained at the moment, even if it is probably much weaker and maybe more tenuous than it was back in July and even parts of August. So let's start with the swing trades this week. I'm going to start with ABBV. So I had taken ABBV on the 7th. This was part of the right line trading room. So this was taken in the room. And you can see that this stock kind of just did nothing for the entire time. Here was a setup at the time that we took it. You can see that we had a strong bullish trend, and the stock had found some support on the 7th. If you look at the market on the 7th, it had a down day, but ABBV was doing quite well and had a chance to push back up higher. So this was a pretty nice trade, and it just ended up chopping around the 8 and the 15 EMAs. You see it broke down here a little bit, and then we kind of pop back up over here, try to get back above this high around 232, but couldn't quite do it. And then pretty much chopped around. And on the 24th, our options were expiring, so we took the loss. So got in on the trade at 8.15, got out at the trade around 112. So total loss about $7 per contract. And this was one where, hey, it was a good setup, but it didn't really work. It held up pretty well. Here's the stock on the 10th. So it held up pretty well on the 10th, but didn't really pop up on the next day, and just kind of did nothing. So took the loss when this ran out of time, and we had earnings coming up on the 31st anyway. So not sure if this stock would rally up into earnings as well. One thing I want to note here on this, let's see if I can pull it up here on my trading view chart, is on ABBV. Yep. You'll see how. There we go. This AVWAP from this breakout was never quite broken, right? We tested it a couple times here. Even the AVWAP on this candle, if I put it up over here, right, that also kind of comes around the same point. So, this is not really giving anything new. I just kept the highest AVWAP. But never able to get through that. And this AVWAP from this prior breakout over here also providing some support. So the stock is just at an AVWAP pinch, which mirrors what's happening on the 8 and the 15 EMAs. So that might be one potential rule I have here is break above the AVU and hold through it, because right now that provided a ceiling. And you can see how every time the stock kind of got up to it, never quite was able to get through that, and then rejected below. Sometimes it can crack through it, but in this case, we didn't really even have the market tailwind for the rest of the month, and that trade ended up fizzling out. All right, next trade was Dow. So I took a Dow time spread, and this was also technically a right line trade, but I was actually the one that had mentioned the trade in the room as a call out, and then that was sent out to everyone. So I'll take credit for it maybe instead of it being called out to me and me deciding to take it. So Dow over here, just a setup on the stock. It's a earnings time spread. So the setup was that it exceeded earnings only about 6.67% of the time, so very low chance. And the IV crush was pretty good. I'm going to pull up the stats over here. Yeah, so the at the money IV at the time was 130. Next week's IV was 50. Was 80. So the IV difference between those two was 50. Now what you have to do is actually do 50 divided by this week's at the money IV of 130, which gets you at about 38%, and we want around 40%. So that 40% crush versus 6.67% of the time is pretty good. So I took the 2150 calls for 27 cents, and I took 18 contracts, so about $480 of max risk. And stock had a gap up over here on the 3rd, and I think also there was potentially some Russia sanction news that may have bolstered some of these energy stocks, but we got a pop up on earnings. It exceeded that range, and the stock came back. It tested the day earlier in the day, and this is also a day, if you look at on the 23rd, right? Market had gapped down, but this stock had gapped up. So we're seeing if this stock is going to kind of move down here, but it didn't. There was a chance you could leg out of the trade potentially somewhere here as the stock made this higher low double bottom and broke through above VWAP. You could have legged out over here, or when the stock had found some support over here, starting to find some relative strength, you could have legged out of the trade here and ridden that up as well. So that was one thing you could have done, but I didn't feel great about legging out of that trade, so I decided to give it another day, right? The stock was above the 50. It had rallied above it. I was waiting to see, all right, maybe it can smack down. We'll see how strong that earnings reaction is, but held those gains from the prior day, and then it moved on. So took the loss on Friday, took the loss. And I got out for 5 cents. So I took a 22-cent loss per contract on that position. All right. Next one here, we're going to go through all the losses first. Next one here was Coin. So Coin took it here. It had broken above the 8 and the 15 EMA at the time, and it took a CDS. We took the 355, 370, 357.50 CDS expiring this week. So let's go back up on the chart over here for Coin. So if you look at Coin at the time, here's Coin on the 20th. There's a market on the 20th. So Coin was a nice setup here. It was, again, getting above the 8 and 15, was bouncing off here, probably a pullback opportunity, and it was in this big gap with some room to move around through here. There are some high volume candles that it could get maybe snagged at, and I believe it actually may have got snagged on this one over here. So I got over here, kind of pulled back, maybe potentially bouncing off here, but then it just pulled back pretty hard. And then crypto had a big pop down on the 22nd. So big selling. This spread was pretty much dead, but we kind of waited it out. And then we got a really big pop up over here on the 24th. So we took took profits on this initial pop. And the way we played it was like, all right, we got the pop up, and then this stock is just surging higher. And then when this momentum started to slow down here on the 10-15 candle, got out of the trade. So initially got into the trade at $2.20, and then we exited the trade at $1.20. So took a $1 loss per contract, which was still a loss, but was way better than what we were getting. We thought the spread was pretty much going to be dead. Did pan out, and that was that. And the stock did rally the next day. So would have actually profited with one more day, but ran out of time with that debit spread. Okay, so PayPal. I was in this PCS from the 7th. So I was in the 1024, 70, 69 PCS. Was looking great. And then we got a big red candle smackdown on the 10th and then push back into the bottom of this range before bouncing back up. So I'm actually going to start this analysis, well, one, just in terms of holding it, because I was like, all right, I'm underwater, but I know there's support here, so it'll probably going to pop. And then ideally on a pop, right, if it pops, and because the spread is now in the money, if it pops and it goes out of the money and we're close to expiration, that time premium decay is really going to start eating away at that cost basis. So on the 22nd here, or even the 23rd here, right, I'm in this trade, and you can see here's exactly where it closes on the 23rd. Closes 69.66. So my price is 70.69, right? So it is basically right at the money, and I don't know where this is going to go. So on this pop-up on the morning, early, I get out of the trade at a 30-cent debit, and I originally bought into the trade at a 22-cent credit. So I got out overall for an 8-cent loss, which is pretty good considering that over here I was down and would have to pay probably like a 60-cent loss on the position. So was able to escape. I did have a chance to get out for probably like a 50% gain or even a small tiny one early in the morning. But on this gap up, right, stock had gapped up and the market had gapped up. If any sort of market reversal happened and this stock tanked, then I would be toast, right? And I'd probably have to pay the max loss. So I'm at this juncture where I don't know exactly where the stock's going to go after a gap up. So I get out early when I can and, take the smaller loss versus the more high variable decision there. Okay, next one over here is Apple. So it took Apple long on the 20th. So let's go back to that date. This is another one that was called out in the room. Yep. So Apple on the 20th, very strong stock, breaking out on heavy volume and strong price action. Had this nice leg up over here. So took the trade right over here at 1025. On Apple, I took the October 31st 252.50 calls for 1350, and then it popped back over here, pulled back down a little bit, and then I got out of the trade here at 1450. So took $1 on those calls. So even though it's technically a day trade, I put it as a swing because I pretty much sized it for a swing, and I was ready to take heat on the D1 as a swing. So that's why I took the trade. So that was a nice little day trade. Again, that was one that was called in the room, and I like this setup, this push off the 8 EMA. I bet a little bit lower, and I got a nice fill, and then it surged up higher. And this is also a day, if you look at what SPY was doing on the 20th, not a big volume day, right? Lower volume, not a huge candle range. We're near the top, so we're not sure if the market's kind of going to be bullish or bearish. We've been chopping around both sides, so kind of hard to really take a whole bunch of longs at that juncture. So that was the additional rationale for that day trade. Next one, AAL. Again, this is another one that was day traded here on the 24th. So this stock, real nice entry, got in around right over here. The close of this 1040 candle, got into the trade as it bounced off the 8 EMA and started to clear the high of the day. Started to rally up higher. So I got in on this trade at 68 cents, and I got out of this trade at 78 cents. So just took a dime on that trade, but that was a nice little win, about 15%. And this is just a strong stock. You're just playing the momentum here, and you're riding this into some gains. But I'd sized it. I I think actually for October 24th. So I think it was actually a lotto technically, which is, yep, that's right. So it's technically a lotto, but it was fairly deep in the money. I believe I'd taken the 11 calls, or no, sorry, the 13 calls, which were trading at just about parity. So not a lot of premium on those guys. Okay, next one here was Mo, M-O. This was a strangle. So this strangle call out in the room was taken on the 21st. And this is the setup for the strangle. So it's made a big move down on the 21st on heavy volume, and then just kind of started to stall over here. So it taken the 64.63 strangle while the stock was at 63, around 63.50. And at the setup at the time was the stock could make a big move down and test that 100-day SMA, and we could get filled, or the stock would make a big pop up maybe to the 8 and the 15, and then you would also get filled. So took that strangle for 66 cents. The other criteria for that strangle is that the ATR, the value of the strangle has to be less than the ATR of the stock. So the ATR of the stock at the time of that was probably 105. This is 105 before that candle, and then we got that strangle for 66 cents. So you want to pay less than $1.05 for that strangle if it sets up there. So that was looking good, and then got out of the trade on the 22nd, and got out for 80 cents on this pop. I missed this fill right over here, but then I got filled on 11.35 right over here on this pop. So it took 14 cents per contract for a nice little win on MO. Okay. VWAV was another one that we had taken. This was a spec trade that was called out in the room. So on VWAV, took the November 21st, 12, I believe it was the $12 calls or the 12.50 calls. Yes, the 12.50 calls, took 2 contracts at 90 cents, mostly premium. The crazy thing that happened on the 21st was that we're in order out to take 25% on this stock, or sorry, 33%, 30 cents per contract, and then the IVs on the stock just had a massive pop on. I'll find the day here. Yep, so we took it here kind of on the 17th. And as the stock is dropping, the IV had a massive pop and got filled during this drop in the stock. So that's just some crazy moving around in the IVs on that premium, but got filled on that and took a nice win. It was also an unusual option activity trade. Okay. Next one over here is Path. This was a short put that I had, so sold this short put on the 14th, and I sold the October 31st 15.50 put, and I sold that for 62 cents. So I was getting just about 8% on that trade. Stock rallied down, tested the AVWAP, took a little bit of heat, and then had a nice rally over here on the 24th, and that's where I closed the trade for a decent gain over here. I got out for 25 cents profit, so took just under 60% profit on that stock, which was a nice win. But yeah, I mean, this one was just pulling back and it was holding, and the reason I exited was that this was still in kind of a bearish channel, and I didn't know what the market was going to do here. There was a chance that it could maybe retrace. So I figured that, all right, I mean, if it retraces back down here, maybe it comes back up, maybe it doesn't. I have some decent profits, so I was going to get out at the next pop. And obviously, the stock had some nice continuation the next day. But, that was my decision, and I'm okay with exiting there. Other one that I closed was Joby. So Joby, also similar trade, October 31st, 1550 short put. And this stock took it right over here on this dip on the 8th, sold that for 75 cents a contract, and they're just kind of wiggling and jiggling around, right? You see that it's going up, it's going down, it's going up, it's going down, but it's holding this 50 SMA, which is my moving support line right at my fill type, my sort of target fill here. So we got a pop up on the 24th on this market news, and we're just sort of holding and chopping around. And, at this point, same thing as Path, where I'm like, all right, well, it's kind of been in this downtrend. It's not really going anywhere. I'm just going to take some profits, de-risk a little bit on this move up, and see what happens. So took profits on Joby. I sold it for a 45-cent debit, so netted 30 cents a contract on that position, and that was a nice little win to round out the week. So those were all of the swing trades. Let's get into the day trades for the week. Okay, so not a lot of day trades for the week, only 7. And I realized, actually, I made an error in my original log. So I said 5 and 1 for day trades. I was actually 5 and 2 for my day trades. So let's go over each of the day trades, starting with Path. So Path, I took long here on the 21st. And here is the setup on Path. Actually, I don't know why I'm going to that chart, because it's going to be up over here. So I went long Path right over here at 1650. As the stock was, at this point, had a nice run up on heavy volume, compressed near the higher day, and breaking out of the compression on nice heavy volume over here. Stock then had pulled back and was compressing for a while before pulling back to VWAP, and then I actually added to the position over here at 1630. So my average price was now 1640. Then the next day, the stock had a big breakdown and actually got through the low of the day, which was my stop. So once it broke through the low of the day, then I got out of the trade for a loss, and I exited that position at 1507. So that was a $1.43 loss per share on that Path. But now because I added to it, I actually had 12 shares, because with lower stock, I increased the share value. So that was a bigger loss, and it ended up being about a $16 loss in terms of the actual dollar value. Again, I mean, it was a good setup. M5 wise, D1 wise, it was a decent D1. Not the best D1. It was still in this downtrend, but it was quite day tradable, especially since it was popping up off the 8 and 15 here. And actually did end up holding the AVWAP and rallying, so it would have been a net winner given some time. But technically, at this juncture, you're like, well, I mean, you're not sure where it's going to go. It broke through the support level that I was leaning on, so I had to get out of the trade. And that's what I did. So that was Path. Next one was MMM. So MMM, I went long on the 23rd. So I went long here. And I knew that this was probably a very risky early trade, but the reason I like this trade is because this stock kind of had this doji sandwich setup. We got this big, long breakout, heavy volume through the major resistance. We held all the gains on the prior day, and we just digested all of those gains as buyers came in. And then we broke through that high very early in the day, and we held that breakout. So I really like this stock. I took it at 170.88. So just right at the close of this candle, stock pulled back, was leading on the 8 and 15 EMAs here, and actually started to break down through that level here and the halfway point of this green candle. So I exited the trade at 168 flat, and exited at about 1010. So the close of this candle here is when I exited the trade. Stock did end up rallying back up and then closed on a new high of the day. So would have ended up being a winner, but that's the tough part with these early trades, is that I think you probably have to give them more room. You can get stopped out of these guys pretty quickly. And I didn't have a hard stop, obviously, but I was leading on the halfway point of this green candle. I knew that VWAP is still developing. It's still early in the day, so if it broke through it hard, I'd have to get out. I could have also leaned on the low of the day as a stop, where it would have allowed me to hold through the trade a little bit more. But, I had my criteria. It didn't work out, and then I bailed out. I could have gotten in again and maybe held this trade over here, or I could have even held on this downward sloping trend line break. So it breaks above this trend line over here at 320 with some nice volume and some bounce off of the VWAP with these higher lows. You can take that and trade that up to a new high of the day. So there's probably some ability to get in back in the trade, but took the trade. I knew what I wanted, didn't pan out, so I got out of the trade. All right. Let's talk about CRM. So we took CRM on the 21st. Not a lot of stocks on this day on the 21st. You can see that very, very, very tiny candle doji on the 21st. So CRM, nice green candle through the 100 SMA on some decent volume here. Delete that. And we had a really, really strong move on volume, right? This stock stacking greens, getting through. You can ignore the intraday lines, actually, because they are a little bit off. But got through those SMAs here on some good volume. So the stock had pulled back, and I like that, so I got it in right over here as it started to get some support above the 8 and above VWAP over here, getting down through this high minus trend line. And I got into CRM at 264.50. So right over here, felt good about getting into the stock. Pretty much did nothing for a little bit, right? We're just kind of compressing, and then, doing, pretty much nothing here. And so I waited pretty much the whole day. Wanted to get a pop on the stock, see if it could sort of break through this level and push up higher. It didn't. So I actually closed this after hours at 264.51. Let me see if I can open up the after hours chart. Yep, there we go. So in this candle here, we got a pop up to 264.68, and I got filled on this pop up, and I was able to get out of the trade. So scratch that one. Just didn't work, and figured I would get in and see what happens on the next day. And stock had to pull back to that SMA 100, and is still holding and testing that level, seeing if it can stay above it. Other trade I took here was Lulu. And I took this guy. Here's a setup on Lulu. October 24th, it was breaking above that SMA 50 and getting into the gap, and also making some higher highs here. So a lot of stuff to like about Lulu on that day. So took the trade at 154, which was, right over here. Stock pulled back. And if you look at this trade here, right, if we had a strong move up, pull back to VWAP, another strong leg up higher. So this was a great entry point kind of around here to ride that move up. Pull back here, and then it was just kind of grinding up most of the day, right? So I figured, all right, it's going to grind up, and maybe I get a nice little acceleration late day where the stock kind of surges up and goes parabolic. But didn't quite get that. I got this pop up here, and I'm looking for this parabolic move, but don't quite get it. Stock kind of turns around, doesn't really do much. So I end up getting out of the trade at 3:04. So I get in at 82.25 and I got out at 82.30. Kind of right around this candle over here. So took a tiny 5-cent win on that trade. Just scratched out of that guy because, market wasn't really going anywhere. Again, this is on October 21st, so the market pretty dead, not really doing a whole lot. Trade didn't pan out, and I tried to give some time for profits to go, manifest, but didn't really work, so got out of the trade there. Next one, CEG. And these 3 trades all took place on the 24th. So, just pull up the SPY chart. I should have done that earlier, but that's okay. SPY chart on the 24th, gap up, very, very flat day in the market. Not really doing a whole lot, but just holding that gap. So there's kind of a slight tailwind for most of the day. CEG took this trade at 11:04 p.m. So took it right over here. Stock was finding some support on this hammer. And then it took 50 cents in this guy. I think I got out over here. So I got in at 388. I got out at 388.52. Again, found some support on the IS-8 EMA here. And then as it rallied up, I took a small gains. I could have probably pushed it a little bit more, probably to 390. So that was it on my part. But is what it is. Just took a small win and was just riding this momentum. And the stock pulled back again, found some support over VWAP. So there was another place to get long at 150 to ride this guy up all the way back to the highs. So that was CEG. Nice win. Again, just trying to find good stocks with good stocks, good entries, good D1 charts. STX was one I'd also taken. I got into this trade on the at 1150. So you see here, so stock had pulled back to VWAP and the 8 EMA. The stock pushed up higher, but couldn't really get much going. So I took it out over here. I got in at 239.30. I was looking for $1.50, didn't quite get it. Got out at 240.04. So got in pretty much around here, 239.30, and then I got out around here at 240.04 as the stock was kind of at the high of the day. So I figured I'd get a small profit. I can wait for a flush back to VWAP and see what sets up again. And then obviously broke through VWAP, couldn't quite hold it, and then today gave back some of those gains and has earnings coming up as well. Last trade was GS. This stock, banks were quite strong on Friday, breaking down through this high minus trend line above the 8 and 15 EMAs, which are sloping up and pointing up now, AVWAP and 50 SMA. So this is a really nice setup in GS. Really, really like it. So what I was waiting for here is super strong, tight price action for the day. And then stock, let's see if I can actually reorganize this or not. Okay, it's a little better. We're just waiting for the stock to pull back. I didn't want to chase it over here because I figured that out. Eventually have to take some heat. So stock pulls back. I get in somewhere around here at exactly 780 on the dot as the stock is at the 8 and the 15 EMAs. This is an aggressive entry. I'm not waiting for the pop-up over here because I know that this is really strong price action. So on a pullback to these levels, I can probably get a pretty good price. Obviously a way better price than up here. I'm saving myself $2.50 from the high. And I can try to get in the next pop. So in the stock here, kind of, pop back down, pop back up over here, trying to get something going, pop back down again, pop back over here, trying to get something going. So it's not really getting anything going over here. So I had my order out for like $2 on this trade. I did actually would have gone ahead and 1 or 2 candles, but at the time that I saw the trade, I was here. And to me, I was like, well, it looks like this trade is like, it's really not going anywhere, right? Like I took it here, and then this stock has just been doing nothing. It's been doing nothing for the past, hour and a half. So I exited for a 50-cent gain in that position, and walked away. So that was, a couple of nice little small wins on a pretty flat day in the market. That was that. So those were the trades. I'm not going to go over the SPY Super System trades. Those are the main trades I took today. But with all those trades, last thing I will leave on is just some of the things I've learned while being in Dave's chat room that I thought I'd share. I'll probably do something more in depth at a Q4 video when I have more to talk about. But just a couple of things that I've learned is that the mindset that he has is really great. I mean, he totally leans on the technicals. If the stock breaks the technicals, he takes the loss. If the stock is holding technicals, he stays in the trade. The options are fixed debits, so he can't lose more than that max loss. And he's very confident in his win rate. He knows that he's going to be in that 85 to 90% range. He puts the market first. He sizes accordingly. So if it's a lower probability, choppier market, he may take smaller positions versus a trending market where he'll take a bigger position. And he handles news really, really well. I mean, let's take, what was that stock? TOL. Well, let's talk about this one. This is a good example. So, right, this stock, we take it here. Great D1 technical setup, right? Still fine here on the 6th. News totally cooks this position here on the 7th, and we have to get out for a loss. And that happens, right? But, he's not thinking, oh, man, I shouldn't have taken this trade. I should have known, right? There's no way you could have known. Part of the trade is that you're going to have to take losses sometimes, so you just take the loss and you move on versus trying to babysit the loss, trying to figure out something to do with the loss, trying to be all cute. You just take the loss on the chin. Kind of sucks. You move on, but that's part of the process. You know that eventually you're going to get the losers, but the winners will outpace the losers. So you just keep taking the setup. And there's a lot of simplicity, I think, to his approach. I mean, he takes more complicated trades that have some more nuance, but the bread and butter system that is 70 to 75% of the trades, just trading relative strength weakness with high probability criteria. He has a set of great criteria. He puts the market first as a bullish, as a neutral, and then he just keeps trading that. And he keeps looking for good setups. And that's it. There's not a huge flight checklist, right? There's not something that's too overbearing. There's not something that's too simple. He has, 6, 7 things, and he just really sticks with that. And then he builds a lot of trust in that. So that's something that I've really taken away from, and you may have noticed it in how I'm critiquing myself, where it's like, okay, well, here's a setup. I took it, it didn't work, so I'm just going to try to take the next setup, and not trying to over-engineer any losses, right, or trying to overreact to certain losses. That's something that I've struggled with before, where I take a loss and I'm like, oh man, is there something I could have done to avoid that? Is there something that's significant over here? And sometimes you're just going to take the loss. This is a probabilistic endeavor. So hopefully that bit of wisdom is helpful to anyone who hears it. The room has been pretty helpful for me. And obviously I'm trying to give back to that room as well as the one option room in terms of trade ideas, and just absorb as much as I can to see if, that will be the solution to take me from the next level of a break-even trader to a consistently winning trader. So that's it for today's video. Thanks for watching, everyone, and I will see you all in the video next week.